All right, hey everybody, this is John. Welcome to the free video, and let's dive right in. Of course, all eyes on Google earnings today. They did come out a little better than expected. The NASDAQ, which started off strong and then spent most of the day selling off, having a little bit of a kickback bounce here. And so the question, of course, at this point is just, are we, is the market ready to rally now, or what's going on? So the two main charts I'm watching here on the NASDAQ. First of all, keep in mind that the daily squeeze is fired and has since lost momentum, and this is where we basically focused on the long side. At this point, now I am waiting essentially for some new sell signals that will come down and test the 382 retracement. Is there any sign of that happening right now? There's not. So it's mostly just sitting here in hurry up and wait mode. For the S&Ps, it's kind of the same thing. Looking for we had the sell signal here. We did go short in the room. Once we took out the high of this low bar on Friday, basically we got out of all shorts, and now it's just in hurry up and wait mode for a new signal. At this point, I am looking for a solid test of this 618 retracement, but notice how we continue to hug the underside of this. And again, we had a squeeze and we've lost momentum. So at this point, I don't like the long side at all, but in the short term, and in terms of the indexes. But this week is, this is power earnings week, and everybody's, of course, in hurry up and wait mode to see what's happening. So if we look at Google after hours, we can see a pretty phenomenal move. So very, very nice move. So no question there. Starbucks was down about 10%, which wasn't bad considering I think all they're doing is drive-through business right now. So definitely showing a sign that there's still some people out there that want to buy coffee. I have not been to a Starbucks once since this whole thing started. Certainly drinking more coffee at home at this point. AMD also had earnings down a little bit, not much. And I want to see how Amazon was doing after hours here. Up a little bit, and then of course we have Tesla tomorrow. So a lot of earnings coming out, and it should be pretty nuts. So from here, the next thing I've been looking at is I've got a couple of friends who are looking at 5-year notes to go negative. Okay, that's negative interest rates. So what's the best way to play that? Well, it's going to be calls on TLT if you don't trade futures. Now, TLT, of course, doesn't necessarily represent the 5-year notes exactly. It's a blend. But if 5-year notes are going negative, that implies that 5-year bonds or 5-year notes, 10-year notes, etc., continue to trend higher. And while I'm not necessarily looking for TLT to bust through and go to 190 here, I am looking for a move to about 175. I like this as kind of a nice conservative trade in this environment. All right, so that's what we got in the short term. All right, so for those of you that are not aware, we are going to be doing a free webinar on Wednesday, April 29th. So today's Tuesday that I'm doing this, so this would be tomorrow night, and is going to cover a strategy called butterflies. Now, for those of you that have been trading for a while, you'll know what these are. If you haven't been trading for a while, and this is your first exposure to this, I would highly recommend that you go to this for multiple reasons. But the main thing with butterflies is that you can set up butterflies, unlike, say, if you buy a call. It's like, oh, I think, Tesla's going higher, so I'm going to buy this call option for $10. All right, so if you buy one, that's going to be $1,000. And either it's going to go up and you're going to make money, or it's going to go down, or you're going to have premium decay and you're going to lose money. And it's all going to happen very quickly. With a butterfly, and maybe your goal on this is, you want to either sell it at $20 so you make $1,000 and you're willing to risk $500 for that, right? Well, with a butterfly in the same trade, you could do something where maybe you buy the butterfly for 50 cents. Okay, so with one option, well, let's do 10 options. With 10 options, that would be $50. Okay, so your max risk would be $50 on that, but your max profit on that could be $4,500. Okay, and so what's nice about this, where you might be stressing over this one lot trade, it's like, oh my God, it's $1,000, I'm up, I'm down, up and down. With something like this, you don't care. It's like, okay, I might lose $50. I can deal with that, and if it works out, I could make $4,500 or somewhere in between. So what's nice about this, if you've never seen this concept before, Henry's going to lay it out for you. And if you are familiar with butterflies, Henry has gotten probably the most methodical I've ever seen of anybody who trades these, because not only is he applying some of the, you can get really complicated into the Greeks, which you don't need to do. But he takes that into account while learning to look at a chart and know, like, where do you put your butterfly? What strikes do you use? Stuff like that. So anyway, this is one of those things where it can make or break your trading, because at the end of the day, our only goal in trading is to create an equity curve that goes from the lower left of our screen to the upper right. And if you do butterflies where you're, if it doesn't work, you lose a little bit. It does work, you make a lot. And you sprinkle that in with some of your directional trades, that does a lot to help the smoothness and overall upward trajectory of your equity curve. So good stuff there. To sign up, go to simplertrading.com/butterfly, enter in your name and email, and you will be sent the information so you can attend. All right, you guys have a great night, and we'll see you at the next update.